What's going on, everyone? I'm coming back at y'all with another stock today. But before I get in this stock, let's go into what's my criteria for my stock that I'm gonna be trying to look at today. So everyone has a different reason why they're buying stocks and to meet their portfolio. But I am building a dividend yield portfolio, and it doesn't matter if it's high yield or not. So my first criteria, it has to pay dividend. My second criteria, they have to be financially stable. And my third is they have to have growth opportunity because I have a long way for retirement. Now, the reason why I'm building this portfolio is I'm trying to build up my passive income portfolio so that in my later years I can have a bridge account or just to have it to pay for my day-to-day living, like my bills, cell phone bills, and everything else like that, and not to worry about it. So that is the reason why I'm getting into a dividend portfolio. Now, let's look at this stock. The stock I'm looking at is Pangaea um, Logistics Solution. So they're a freight company, it looks like, and they're in transferring goods. With the upcoming year, I think it's going to be pretty reasonable to find a company to add to my portfolio that is in the transport um, field because I want to have a well diverse portfolio. I can't just be an all in tech. I can't be all into telecoms or commerce. So for a good portfolio, you need to be diversified so that if the market hits, you have a better chance of keeping a good portfolio. So your portfolio won't drop down like crazy. And the reason why I'm picking dividends is because dividend has less reaction in the market. So let's look at the investor press release. I can look at all this other stuff on it. But by looking at these pictures, they transport raw material, a lot of it, and with the upcoming presidency, I see that it's gonna be probably be doing pretty well. So let's look at this stock. Let's look at my first criteria. Does it pay a dividend? Well, yes, it pays a dividend yield of 8.26%. That's a very good dividend yield, really high. But just because there's a high dividend yield doesn't mean it's worth it because you don't want to lose value of the stock faster than you gain value from the dividend yield. In 1 month, according to this chart, you lost 18% and they only pay 8.26%. So you would lose more than you would gain from the dividend on this, according to the 1 month. According to the year, 41%. Yes, you will lose more than you will gain on this dividend yield. Now, just because it tells you it's losing does not mean it's gonna happen in the future. So let's look at the 1 year. The 1 year lost 38%. So yes, according to this chart and everything, if you purchase this and go off these numbers, the dividend yield on this is not worth it because you get an 8.26% a year and you're losing 38% on a year. So your loss is around 30% a year on this stock valuation. Now, if you go to 3 years, it tells you a little bit different. It went up 30%, and the 5 years, it went up 58%. So maybe they had some issues and no one was transporting goods. There's a lot of things that could happen. So let's look at the finance. The finance, let's see. In 2016, 238 million, and 2023 is 499 million. It looks like during the COVID year, they had an uptake in goods being sent over around. So cost of goods went down, gross profit went down, operation expense went up a little bit. operation income went down, other income went up, or expenses went up. So let's look at the gross margin. The gross margin 31%. That's pretty good gross margin. It looks like operation expense takes up most of the income, but they still net profit of 5.72%. For that high yield of a dividend, kind of makes sense. I prefer a net profit to be around the 10%, but doesn't mean it's not a stock worth having in your portfolio. It's just right now, on the finances, they're stable. Now, let's look at the company, see what they are doing with the stocks. Okay, no one in the company is selling their stocks that they were being granted. That's a pretty good sign that there's a growth opportunity, just because I know that their board members are holding onto the stock for whatever reason. And it's probably due to passive income. Now, let's look what AI says about this stock. Also, AI actually gives it a pretty good rating. I think it's giving it about a 5 or 4.8. It gives it 6 in valuation, 5 out of 6 on health, and performance 4 out of 6. Growth 5 out of 6, and earning is 4 out of 6. So according to AI, they think it has good growth opportunity, and the analysts are saying it's a strong buy. Now, what is my opinion on this stock? Well, personally, I think I will add a little bit of this stock in my portfolio, because I think in the next year it's going to recover a little bit and go up, just because of the presidency and what's going on in the world, that the transport goods. Because it looks like it was going down just last year, but it was having a steady, increase in the last few years. And the 3 years looks like the same thing. It looks like it might start recovering soon, and I would like to take advantage of the growth. I think might be close to where it's gonna bottom out, and that's me taking a risk. Because now, I give you an example. If I do end up recovering and this is the lowest point, it's gonna have a very good growth opportunity. Now, what is the issue with this? This is a highly, highly risky stock to buy for a dividend account. So if you have a long-term dividend portfolio that you want to put this in, I think it will be good, because I think it will recover and be worth more in the future. But for short term, I think this stock will be bad. So if you're close to retirement, you might end up losing valuation due to what the chart is saying over the last year and 3 months and 1 year. So, but over the last 3 years, the valuation went up 30% and 58%. So if I hold on to this stock for 5 years, I should roughly gain money with a high dividend of this. Now, I'm not going to put a whole lot of money into it, maybe about $1,000, and watch and see what it does. Because I believe it's a very good stock for me to have, just because the numbers are making sense based off the AI readings. And the other thing is, I don't think this company is going to be going anywhere, because raw goods need to be transported around. And the cheapest way to transport raw goods is through logistic on boats. And we're going to have to ship coal and other raw materials from overseas to us for electric vehicles, or us sending stuff overseas for trading wise. And that's the main reason why. With the uptake of going green, and this company already has their ships and cargoes at the cleanest it can be for a logistic company. So with that in mind, they're already green. So with them already going green, the analyst saying it's a strong buy, I think this is a perfect one to add to my portfolio. It's weird to say because according to the chart, the 1 month and 1 year, I shouldn't buy it because it's not recovering yet. But their financial is stable, and since the company CEOs and board members aren't selling, it gives me hope for the company. And they are gonna end up growing in the next year or two due to purchasing supplies overseas to America just so they can make electric vehicles and going green applies to go green. So with this trying to go green, we're gonna need more shipping and getting more raw goods. We can't get everything in America, and we can't mine everything fast enough. So just for cheaper raw material, I think we will have to go overseas. Now this is my review of it. So before you go into it, should you add to yours, make sure you do your due diligence. Because I'm not looking at the 8.26% high dividend yield. I think the 8.26 high dividend yield is worth it. But they have a very, very strong history of paying dividend. With them having a strong history of paying strong dividend means that they're able to handle their finance no matter how much money they make or how little money they make. Because it looks like they never went in the red in net profit according to this chart. Now they're not always in the best numbers, but they're financially solid. Since they're financially solid, that only leaves the growth. And looking at the 5-year chart, the max chart, it kind of trying to say, hey, if they're going to recover, it might be now. Now, remember, this is a highly risky stock. I don't recommend you adding this if you're looking for a good growth opportunity. I don't recommend this stock if you're not willing to risk it, because this stock is a very risky stock. It's going to be one of my more risky stock that will add to my portfolio. So remember, I'm not going to add a lot of it, but if this one does have a good growth year in the next year or two, like it reached $9.82, I did double my valuation with a high paying dividend stock. Will it stay in my portfolio forever? I don't think so. But for the next 2 or 3 years, I think this will have a growth opportunity. So please like and subscribe to my video and stay tuned for the next one. Maybe I won't add it. I'll think about it. But of course, the numbers I see, it looks like I should add it because it's going to recover and it's going to end up growing due to what's going on in the world and everyone trying to go green, and they're going to need the raw material to go green. So with this shipping company,